Hello everyone and welcome to Ticker.com's news channel on YouTube. On this channel, we review stock markets, discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. This week, investors reviewed three reports on job market confirming moderating trends. The U.S. economy added a net 187,000 jobs in August, and payrolls expanded at a faster pace for the third month in a row, the U.S. Bureau of Labor Statistics reported. Though job gains accelerated from the previous month, net additions remained below 200,000 for the third month in a row. Jobless rate increased to 3.8% and the number of unemployed increased by 500,000 to 6.4 million from 6 million a year ago. The jobless rate increased from 3.7% after more people were available for work in the same period. Average hourly rates increased at a moderate pace of 4.3% from a year ago, reflecting easing labor market conditions and slowing economy. The second job report this week showed fewer job openings announced by employers. The job openings and labor turnover survey showed cooling job market. The number of job openings declined by 338,000 from the previous month to 8.8 million in July, the lowest level since March 2021 or 28 months. The job openings declined by third month in a row, indicating the job market is gradually cooling after the Federal Reserve lifted rates 11 times over the last 16 months and the economy has not felt the full impact of rate hikes yet. The cooling trend in the job market reported by the JOLTS report from the government was also confirmed by the private sector payrolls reported on Wednesday. Private sector payrolls expanded 177,000 in August, sharply lower than the downwardly revised 371,000 in July, the monthly survey released by the ADP showed on Wednesday. ADP monthly data is far less reliable and considered noisy because of its inherent volatility and sharp revisions. But still, the report confirmed the cooling job market trend after multiple rate hikes by the Federal Reserve. In short, job market growth is moderating, just as more people are joining the labor force. And that is the reason why the unemployment rate is increasing. Investors also reviewed the downward revision of the second quarter economic growth estimate. The second quarter U.S. economic growth was revised lower, primarily reflecting adjustments in inventories, the U.S. Bureau of Economic Analysis said Wednesday. The U.S. economy expanded at an annual 2.1% rate in the second quarter, revised from the preliminary rate of 2.4% and down from the first quarter's expansion of 2%, the statistical agency said in its second estimate. The private inventory investments and non-residential fixed investments were downwardly revised and partly offset by an upwardly revised state and local government spending. On the inflation front, there are mixed news in the latest report. Core personal consumption expenditures index increased 0.2% in July from the previous month and jumped 4.2% from a year ago, the U.S. Bureau of Economic Analysis reported Thursday. The core PCE index, which significantly understates inflation felt by most families, is the preferred inflation measure of the Federal Reserve. The overall PCE index increased 0.2% from the previous month and rose 3.3% from a year ago. The inflation reading confirmed prices are still rising at a faster pace despite multiple rate hikes over the last 16 months. The stubborn inflation data provided another signal to the Fed's policymakers and supported the case for hawkish stance. In other economic news, initial jobless claims adjusted for seasonal factors declined 4,000 to 228,000 in the week ending on August 26, the U.S. Labor Department reported Thursday. Meanwhile, continuing claims rose 28,000 from the previous week's downwardly revised to 1.725 million in the week ending on August 19. Let's turn our attention to economic news in Europe. Consumer price inflation in the Eurozone remained unchanged at 5.3% in August, the European Central Bank reported Thursday. On the other end, core inflation rate, which excludes volatile food, energy, and tobacco prices, cooled to 5.3% from 5.5% in July. In other economic news in the region, the euro area seasonally adjusted jobless rate stayed at a record low of 6.4% in July, lower than 6.7% in the period a year ago, Eurostat reported Thursday. Jobless rate was the lowest in Germany with 2.9% and was the highest in Spain at 11.6%, followed by 7.6% in Italy and 7.4% in France. Manufacturing activities gathered pace to the level last seen 3 months ago, and the decline in growth eased in August. A survey conducted by the S&P Global showed on Thursday. Germany's manufacturing weakness continues, or rather Germany's manufacturing growth weakness continued in August. France's manufacturing accelerated its decline in new orders, putting production and employment under pressure. The UK home prices fell at the fastest pace in more than 14 years in August as rising borrowing costs negatively impacted housing market activity, the Nationwide Building Society report highlighted. Home prices posted an annual decline of 5.3% after easing 3.8% in July. The decline was the largest since July 2009. Passenger vehicle sales in the European Union continued to increase for the 12th month in a row, the European Automobile Manufacturers Association reported Wednesday. New car registrations increased 15% to 851,200 units in July after supply chain disruptions eased and production picked up. Sales in four largest markets in the region rose as customers showed willingness to buy vehicles despite higher prices. Passenger vehicle registration in France increased 20%, in Germany advanced 18%, Spain jumped 11%, and in Italy increased 9%. Battery-powered vehicles garnered a larger share of the totals, and sales increased to 13.6% from 9.8% a year ago. Spain's retail sales accelerated to 7.3% in July from the upwardly revised 6.5% annual rate in June, the National Statistics Institute or INE reported on Tuesday. We now turn our attention to economic news in Asia. Japan's jobless rate unexpectedly rose to 2.7% in July from 2.5% in June, the Ministry of Internal Affairs and Commerce said Tuesday. The unemployment rate rose to a 4-month high and increased by 110,000 from the previous month to 1.84 million. In the region, China announced several measures to revive real estate and financial markets, including the halving of stamp duty from Monday. China's finance ministry lowered its stamp duty for stock transactions to 0.05% and lowered margin requirements to 80% from 100% on Monday. On Friday, China announced new measures to support property market and the yuan. Minimum down payments for mortgages will be cut to 20% for the first-time home buyers and 30% for the second-time buyers, according to joint statements by the People's Bank of China and National Administration of Financial Regulations. In addition, the central bank also lowered interest rates on new mortgage rates by 40 basis points for the premium to its benchmark loan prime rate. Regulators also said mortgage rates on existing loans can be renegotiated starting as early as September 25th. The lowered rates are likely to help 40 million home buyers, or about two-thirds of housing loans in the country. The PBOC announced foreign exchange reserves requirements to 4% from 6% for banks to support the weakening yuan, which has been under pressure for the last 5 months. The yuan has dropped about 6% as foreign investors pulled out of China amid deepening real estate crisis. A private survey of manufacturing industry showed a surprise expansion in August, making the highest level since February and significant improvements in the factory activities. Moving on to India, India's GDP accelerated in June quarter to 7.8% from 6.1% in the March quarter, but slower than 13.1% in the quarter a year ago, the National Statistics Office said on Thursday. The overall economic growth was driven by a 12.2% increase in financial, professional, and real estate services. Manufacturing expanded at 4.7% and construction expanded 7.9%, followed by 5.8% increase in the mining sector. Agriculture output rose only 3.5%. The familiar pattern of services and government spending driving the economy played out again in the first quarter. Separately, the preliminary data showed that the combined output of the 8 core industries rose 8% in July, slower than 8.3% rise in June. The Commerce Ministry reported Thursday. The 8 core industries include cement, coal, steel, crude oil, natural gas, electricity, refinery products, and fertilizers. Among the 8 industries, Coal production increased at the fastest pace of 14.9% from a year ago in July, followed by steel manufacturing with 13.5% increase. Looking at stock markets around the world, we start with the US. Global markets traded higher and the US market averages led the advance. The rebound in tech and energy sector stocks for 5 days in a row led the US markets higher. The US 10-year Treasury yields eased from 16-year highs after the release of 3 labor market reports this week. European markets streamed gains to 2% after resource stocks jumped, but inflation worries dominated market sentiment. Market indices in China and Hong Kong struggled for the 4th week in a row despite several new stimulus measures by the government. India indices halted 6-week losing streak after the tech service providers rebounded. Let us review stocks in the news this week, and we start the stocks that dominated the list of gainers. Dell Technologies said second quarter revenue fell 13% and net income declined 10%, but the quarterly results were ahead of market expectations. Lululemon Athletica said sales increased 18%, driven by 11% in North America and 52% in international markets. MongoDB said quarterly subscription revenue increased 40% and cash burn rate improved. Salesforce, the customer's management software developer, reported better than expected quarterly results. Okta Inc., the identity access management company, reported sales and earnings growth ahead of market expectations. CrowdStrike, the cybersecurity management company, reported sales and adjusted earnings ahead of market expectations. Signet Jewelers said sales in the second quarter declined and forecasted a decline in sales in the full year 2023. PVH Corp., the parent of Calvin Klein, reported strong quarterly results and lifted its 2023 earnings per share and sales estimate. Insulet Corp. Rose after the company's chief executive decided to increase stake in the company. Big Lots reported a surge in loss on the account of unwinding synthetic lease exit costs. HP Enterprise reported solid quarterly results on the strength in networking gear sales. Let us review stocks or market movers that are on the downside. Five Below Inc., the deep discount retailer, forecasted weak third quarter sales. Victoria's Secret, intimate apparel retailer, reported mixed quarterly results. Chewy said quarterly sales rose 14% and active customers declined 0.6% as cost of pet care rose amid rising inflation, but gross margin rose by 20 basis points to 28.3%. Boxing, the cloud storage company, reported mixed quarterly results. NIO, the China-based electric vehicle maker, reported wider than expected quarterly loss. Best Buy reported comparable same-store sales declined 6.2% in the second quarter, slower than 12.1% in the quarter a year ago. 3M Company agreed to settle lawsuits related to defective military earplugs for $6 billion. Delivery Hero, the German online food delivery service company, reported operating and net loss in the first half. Pernod Ricard, the French spirit maker, said sales in key markets in China and the US are likely to decline in the fiscal first quarter ending in September. Looking ahead on the economic front, US market will be closed in celebration for Labor Day, and investors will review the release of factory orders, weekly jobless claims, and private service on services. In Europe, second quarter economic growth, industrial production in France and Germany, and inflation and balance of trade data in Germany are scheduled to be released. China is scheduled to report its August trade data, and Japan will update its current account data in July this week. That's all for today, and we will see you next week, and you can read daily market updates on ticker.com.